Hello and welcome to a new video. In this video, we're going to take a look at the Base protocol. I've put some timestamps in the description of this video so you can jump through all the different sections. We are going to cover what is Base, then we'll take a look at what we can expect, how the system works, then we'll take a look at the use cases, the token sale and the tokenomics, a quick look at the technology, the team, and then my personal view on Base token and the project itself. As usual, I would like to ask you to give the video a like and subscribe if you enjoy this type of content at the end of this video. So let's dive right in. So first of all, what is Base protocol? So Base protocol is a token whose price is pegged to the total market cap of the entire cryptocurrency market. So what does that mean? Well, they aimed for a crypto market of $1 trillion and then they made a 1-to-1 peg. This means if the cryptocurrency market is $1 trillion, then the Base token should be $1. So what does that mean? Well, right now the crypto market is about 560 billion. That means the token is aiming to be $0.56. If the crypto market goes up to, for example, 800 billion, then the Base token will try to be $0.8. So basically, what does this mean? Well, first of all, it acts like a stablecoin, just as the USDC or USDT is pegged to the US dollar. This one is pegged to the cryptocurrency market. Now, of course, what is more interesting, well, that is to see how this whole thing works, and that's why we have the white paper. And if you don't like reading, just take a look at the light paper. That is the minimum you should do if you're considering investing into this project. Of course, we are putting our big boy pants on and we are taking a look at the entire white paper. So the first interesting part is the elastic supply. Elastic supply means that if we want the price to go down, then we just create more Base tokens. If we want the price to go up, then we'll destroy some tokens, so we will burn tokens, then there is less supply, and hopefully if the demand stays the same, then the price should go up. So the whole purpose of the elastic supply is to get that price as close as possible to that market cap. This also means there is no fixed supply for this token. It is elastic. This brings us immediately to the most important part of this project, which is rebasing, and that's where it got its name from. Base token, rebasing. This is the core of the whole project. So to really understand how this works, we're going to take a look at the dashboard. So we can see that the current market cap is 564 billion. The data is being pulled from Chainlink, so that gives us a little bit of confidence. The target price is therefore 0.56. Our current price is 1.56, so that means that in the next rebase in 30 minutes, the price will be corrected. This means that more tokens will be created in the rebase function, and then hopefully people will say, well, I made enough money because I just got 170% extra tokens. And this is exactly what happened. So 1 minute after the rebase, the price dumped because a lot of people said, well, I just got almost double the amount of tokens for a much higher price. So they sell it immediately and that pushes the price down. Now, quote unquote, sadly, we are still at 0.71 and the market cap is at 563 billion. So we are still too high if we want to have the Base token pegged to the current market cap. So this will probably mean if the price will go up again in the next 24 hours that we will just have another positive rebase. Now when we look at the graph, the first rebase was this one. So after the launch on Monday, then this one was a pretty big correction. So if you don't know what is going on and you just bought the Base token, you must have been really in panic mode that people dumped the token, but this is exactly what the protocol is trying to get people to do. Then the price went up again, then we had a very small rebase yesterday, then the price went up today, and then we had a decent rebase back to the same level. But again, the whole idea is that we get the price to the market cap level of the whole cryptocurrency market. So now that you understand on how it works in real life, we'll quickly go over this rebase function. They state the whole example here is pretty easy to read and you'll very quickly understand it. So the first situation is we try to have an equilibrium at 1. In this case, we are assuming a $1 trillion market cap. The price is going up, so the rebase will say, okay, we have to correct this. We have to try to get closer to the equilibrium, so it will create twice the amount of tokens. And then hopefully people will say, wow, twice the amount of tokens, let's sell it, let's take our profits, and then it will go down again. Of course, we can also have the other situation. That means when the price is too low, then the rebase will burn tokens, so there will be less supply, and that will hopefully push up the price once more towards the equilibrium. The next part in the white paper, and that is something I definitely like to see, it's the challenges. So this is the meat and potatoes when it comes to risk in this project. So the first examples were, of course, the perfect examples and how it hopefully will be. Now, what happens if the price just keeps increasing? As we saw after the second rebase, there wasn't much of a correction, and it seems like we kept building on top of that $0.70 price. So this is something that can happen. You have a rebase, but you don't have the desired effect of going down. So long story short, the biggest risk of this project is that we are not able to peg to the market cap value. I mean, if it's too low, then it's useless, and if it's too high, then it's useless as well. Then it's only used for speculation, and then the inherent value of the token itself is basically zero. So to counter these things from happening, they integrated a few things to incentivize people in the early adoption phases. You can read about this here, and in the base protocol hypothesis that you have right here. Then we dive into the technical aspects. So of course, the most important aspect of a stablecoin, whether it's pegged to the dollar or to the market cap of the cryptocurrency market, is stabilization. So in the beginning, we want adoption. So we're trying to get a lot of people into the project by making it really interesting. So it will be less stable in the beginning, and then eventually the project will move very close to that stable peg. Then we quickly talk about the liquidity pool, the liquidity mining program, and the rebase frequency. As I mentioned before, right now the frequency is every 24 hours, but of course this will be moved up once we want to see a more stabilized environment. Then if you want to find out more about the programming, you can go to GitHub because it's all open source. And then they explain how they get all the market cap information from Chainlink, which will give them 11 off-chain cryptocurrency data APIs, so they're not pulling from one source. Now, why is this important? Well, a lot of those DeFi projects last summer, they got into a lot of trouble by just using one data source, because it's very easy to manipulate the protocol if you're just using one data source. So that's why it's good news that they're using Chainlink and they're using 11 off-chain cryptocurrency data APIs. Then right now in the early stages, the Cascade program is definitely something interesting. This is their reward program for putting your coins in the liquidity pool. So first of all, you supply liquidity on Uniswap. Just as with any token, by supplying liquidity on Uniswap, you will get rewards on all the transactions, but they want to make it even more interesting, and that's why they created the Cascade system. So the Cascade system is giving you rewards on top of the liquidity rewards that Uniswap is giving you. So basically you're getting rewards on rewards, and you are able to get a multiplier the longer you stake your coins, with a maximum of a multiplier of 3, which means you have staked your coins for 3 months. Because I don't want to make this video too long, you can dive into this white paper if you want to see the exact numbers for the rewards pool and so on. So now that we know how the protocol works, it is time to talk about the use case. As I mentioned in the beginning, the crypto index aspect is definitely the most interesting. I mean, imagine if you can sell your crypto just into base token. This way you will always be investing into the crypto market. You will be shielded from big swings. You will not have the risk of investing in just one token or 2 tokens. No, you'll be investing into the entire crypto market. So if you believe in the crypto market and that the crypto market is going up, but you want to be shielded from those big swings, well, then base token could be the answer. But keep in mind, we are still very early in this project. This aspect that we just discussed, this wonderful idea of a crypto index, will only happen if the project matures. So right now, there's a lot of speculation in the potential of this project, and we're definitely not there yet. So this will only be successful if we can have a token that is really pegged very closely to that market cap value. All right, let's dive into the tokenomics. The first thing that I want to mention is that you have the supply allocation diagram here on the front page, and sadly it is not a complete match with the tokenomics document. But let's assume that the PDF is correct. So 51% will be divided before the token launches, which is on the 30th. In the beginning I was like, 51%, it is a lot. A big part is going to VCs, then strategic partners and seed funding. So I'm very inclined to see this entire group, which is about 20, 30, almost 40%. I assume is very closely related to the founders, and only the strategic pre-sale and the public offering are really going to the public. And then we have operational reserves, which is 49%. The ecosystem, the initial supply, and of course the foundation, I am very inclined to see them as a group as well. And I assume that the advisors are also close friends to the founding team. So I was a bit worried to see such a high percentage very closely linked to the people who started with this project. On the other hand, I am also pretty happy. These tokens are vested for 12 months, 4 months, 3 months, 4 months. So that is a lot, and I think that will help with the stability of the coin in the beginning. It's only a very limited amount that can really be dumped into the market. So in that way, I'm happy that it's this way. But I also sent him an email asking to give some more information and insight on how I should look at these at this distribution, because I'm still a little bit worried that it's very high in favor of the founding team. Okay, let's move on to the technology. We already said that the code is open source and it's available on GitHub, so you can take a look if you know Solidity. Then the token is based on Ethereum, so it's an ERC20 token that can be traded on Uniswap. So if you want to provide liquidity to the algorithm, then just go to Uniswap and add some liquidity there. I also already mentioned that Chainlink is the oracle. I'm very happy to see that logo, of course, but I double checked with Chainlink. I sent them an email and they did confirm that Base Protocol is indeed using them as an oracle. Again, these are things that you can very easily check when you're looking at a new project. Just shoot out an email to, for example, Chainlink, and they will reply to you in 1 or 2 days. So you can at least confirm things like that very easily and see if it's true, because anyone can put up some logos on their website, of course. Then it's time to take a look at the team. I'm really happy that they put themselves on there. We have some LinkedIn profiles. Too bad that Based McGee is not putting up a LinkedIn profile, but hey, it is what it is. Then when you click on team, you will go to a Medium post giving some more information on the background of the entire team. I will try to go through this as quickly as possible. So we have a full stack developer with 10 years of experience. We have Nick, who has managing and consulting experience in the crypto space. He has been there since 2015 and he created his own project in 2017. And as you can see, he has also got some business experience. Then we have a marketeer, which is always good in combination with some good developers. So he has been active in the crypto space since 2014. Great job there. Then we have Based McGee is a Solidity developer. He has 10 years of experience, which is also good. And then this is definitely interesting to see. So they're saying that they had a previous project together. So they have experience together. They worked on a crypto project together, and this crypto project has failed. So they're not lying about it. They're very open about it. They did a project. They learned a lot from it. And then sadly, it didn't go through. And what is more important, at the end, when they threw in the towel, they refunded all the remaining ETH holdings to the token buyers. So I think that says a lot about them as people and persons. So I think they have the heart in the right place. As we know, as with any startups, a big portion will fail. I think it's easy to say that 9 out of 10 projects will fail. But still, they try to make the best of it. So I'm happy to see this mentality. Then last but not least, we're going to take a look at the roadmap. As we can see, we are still super early. This is the first week that the project has launched. If we survive the rest of the year and then we move into Q1, then we'll see hopefully a lot of fireworks, because then the real marketing will start. In Q2, they will create a Base Protocol DEX. Then they'll try to get into the lending space and they will look at Base governance proposals. And then finally, at the end of 2021, if we are still around, they will really do a push and try to reach out to institutional investors and take the Base protocol to the next level. So how do you get started? Well, simply click Buy Base. That will take you to Uniswap. Then you will link your Meta wallet to Uniswap and trade some ETH for the Base token. You will have to add the Base token yourself because it's not by default in the list. So if you want to add a token, make sure that you get the right contract. I think, and for me personally, it's always easiest to go to CoinGecko, search for the Base protocol, click here, copy the contract code, then go back to Uniswap and simply paste the address in here. There you go. Once you've got the tokens, there are two things you can do. So you can play the arbitrage, which means that you buy today, you hope that the price goes up, you hope that there is a positive rebase, and then as soon as the rebase happens, you sell the tokens for a lot of profit. When it goes down again, you buy the tokens back in. So the other thing you can do is just provide liquidity in the Uniswap pool. If you're going to provide liquidity, definitely take a look at the Cascade function. So to join the Cascade, you first have to provide liquidity to the pool. Then you go to the Base Protocol website, click on Cascade. Again, you'll have to link your Meta wallet. And then you just enter the amount that you want to provide to the protocol and click Stake. Now keep in mind, there is a timer. And then when you want to withdraw, just click Withdraw. And then we see that timer here, how much time it takes until you can withdraw your tokens. So for me, I have to wait 1 day, 29 minutes. I don't think the timer resets, but I'll double check. Just keep it in mind that as soon as you deposit your tokens, it will take a while, about 3 days before you can get it out. And I think the timer doesn't reset. So as long as you don't add new tokens, the timer will not reset. And if you add new tokens, then the timer will reset to the moment that you added your tokens. So that's the second way you can earn rewards. So you're not playing the arbitrage, you're just providing liquidity. So you get those liquidity rewards from Uniswap. And if there's a rebase, you will get double the amount of tokens if it's 200%. If the rebase is, let's say, 70%, okay, then you get 70% extra tokens, which is definitely nice. And then you just keep earning those rewards. Also keep in mind, if there is a correction in the other direction, if they're going to burn tokens, then of course tokens will also be burned. The third and probably the simplest solution is if you believe in a project long term, then you just buy the token and hold the token. So anyone who has tokens will be influenced by the rebase, either positive or negative. But if you believe that the cryptocurrency market will grow, then you simply hold the tokens and you will enjoy the benefits of this project. On the other hand, if you are going to wait anyway, you believe that the market is going to grow, you believe in Ethereum, and you believe in the project, then why not join the Cascade? Because your rewards will be a lot higher. So personally, I'm investing a little bit in the Cascade, and I'll keep an eye on the project because I really think it's an interesting project. Keep in mind, it is still very volatile right now. It is really early. It can very easily fail. So if you want to play it safe, just wait about 3 or 4 months and then take a look at the project again in March, and then you can still jump in. Alright, that's it for this video. If you got any questions about the Base protocol or just questions in general, do not hesitate to post a comment and I will reply as fast as possible. Do not forget to like the video, do not forget to subscribe, just post a comment and that will help me so much getting higher in the YouTube algorithm. I think we've grown a lot since the last video and I hope we can keep up this momentum. So everybody, thank you for watching and thank you for supporting the channel.